Ooh, baby, what a squeeze. What a squeeze. Another fantastic day. It's been a fantastic week so far. Boy, it didn't matter what direction you chose today, which entry setup we talked about last night. I think everybody made some money today, so well done. But let's get back to work. Let's get refocused because we are at a critical area on the chart right now. We've been talking about the 60-minute chart all week. Those ranges on the 60-minute, the sellers are desperately trying to hold the underbelly of those ranges right now. The buyers want to keep this party going and squeezing higher, and the bears are trying to hold on to the underbelly. I'll tell you, the next 24 hours may determine the rest of the month of October and really the rest of the year, because we're now in that fourth quarter of the year 2023. So we have a lot to cover in another very important video tonight. Now, before we jump in and get our hands dirty on the charts tonight, make sure you subscribe. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor here as always, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in. It's been a fantastic week, a fun week to be a trader, but let's get back to work. Let's go find some more winning trades on Thursday. Now, let's start first here, as always, on the 60-minute time frames, my NASDAQ and the triple Qs. Oh, we got the E-mini and the SPY. Remember, we like to use the 60-minute charts to plan our trades for the following day. And then later on in the video, I'm going to drill down to some tick charts. Tick charts make the entry timing a hell of a lot easier. So we'll start first on the big picture, put the game plan together there, and we'll drill down and talk entry tactics as we go deeper into the lesson. As I mentioned in the introduction right now, the bears are still in control of this market, but they are desperately trying to hold, especially the underbelly of the range on the S&P right now. The bears trying to desperately hold that underbelly. They're trying to retest that low. The buyers, though, they want to keep that squeeze going, right? They want to keep that run going back up into that trading range. NASDAQ, strong run down. Bears trying desperately to hold this. If they fail, though, you know where this thing wants to go, right? It'll want to continue that squeeze going higher. That's why I said we are at a critical turning point right now that may determine the trajectory of the rest of the month. Now, the good news is this. No matter who wins this battle, I'm going to give you guys a game plan to make money on the long side and the short side here for tomorrow. So I will not let you down. We'll get you guys ready for battle here tomorrow. Now, speaking of tomorrow, before we jump in and get our hands dirty here on the entry tactics for tomorrow, just be aware of the news schedule for tomorrow. We probably have the calm before the storm tomorrow. We've had quite a bit of big news. Jolts on Tuesday, ISM on Wednesday. We got jobless claims tomorrow, but that's never usually a big catalyst. Tomorrow probably going to be the calm before the storm as we come back to non-farm payrolls on Friday. Tomorrow night's video, we'll be talking quite a bit about how the game plan ahead of the holiday weekend, but kind of the calm before the storm tomorrow. Not a lot of major news. We'll keep our eyes open, though, for Fed speakers and things like that tomorrow in our trade room. Now, let's get back to our charts, though, because it's good to know when the news is, but the money is made on the charts. Let's go out now, and let's talk about our favorite trades here for tomorrow. I'm going to start first here on the S&P and the SPY, and we'll wrap up tonight, of course, on the NASDAQ and the triple Qs. So as I mentioned in the introduction, right, we've been watching this trading range all week. We talked about how we had that strong run down. We popped up into a trading range. We expected that run back to that low, and we thought this would be a critical area. The sellers are clearly getting rejected holding off that low. And like I said earlier, they're in a do or die area right now. The buyers, they want to push right on through up into that trading range. The bears, of course, they want to hold this and retest that low. There is a lot of bullish momentum right now, which you will see in a moment on the fast time frames. Buyers have all the momentum, but bears, they've got some opportunities as well. So let's now drill down to some tick charts. Let's talk about, right, how do we short this thing back down against all that momentum, and how do we buy it, right? How do we buy it going back up into that range? I'm glad you asked, because we got a pretty good game plan to do this here for tomorrow. Now, tick charts. I always use tick charts in our trade room each morning because they make the entries a whole lot easier. This is a 7,000 tick chart, upper left-hand corner, and that is the 21 EMA, in case you're watching right now for the first time. Now, there are really kind of two main components that are kind of tipping us off to where I think the best trades are going to be for tomorrow. The first one is on the fast time frame. It's a bull market into a trading range. Now, if you guys are taking my free classes right now, or you're a student of mine in the trade room, you know that anytime we see a range breakout, we expect a breakout pullback, right? Breakout pullback. And so there are ways to make money on the pullback, and there are ways to make money after it bounces, right? There's ways to short it, and there's ways to buy it, right? So it's a range, it's a breakout pullback, right? That's one core component here on this chart. The second key component are going to be what I call the 60-minute trap levels. Now, what I mean by that is, let's go back to our 60-minute chart here just briefly. We got the bears squeezed here, right, and running higher. When markets move higher like this, what fuels them moving higher is the stops, right? Stops get run and the market squeezes higher. Now, when buyers come back into the market, they're not going to want to buy high. They can't buy high, right? Because at this point, they're buying right into what we assume are sellers. So remember, whenever markets bounce hard off of these lows, what makes it bounce hard is not usually all buyers, it's mostly stop runs. So when buyers come back into the market, they need to buy as low as they can, and they do that with what we call traps or trap levels. So below these prior swings are likely where this looks like a crown reversal pattern for anyone who watches these videos right now. But this is kind of the key component right now for the buyers going higher, right? These are the levels, that 65 and a quarter, and that 54 and a quarter there, right? So as the bears get squeezed going higher, buyers are probably not going to want to buy high right now. They're going to want to buy as low as they can. And you want to think about these two areas. These are the big areas where you'd expect a lot of buyers to be hanging out below. So when you put these two things together, when you put together that range breakout pullback, and you have your eyes on those major swings, because we assume that's where all the buyers, to avoid buying too high, are going to be looking to get in to buy as low as possible. Now let's put the game plan together on this. There really is there's kind of a three-legged process that you want to think about with this. Again, think about that breakout, that pullback, and that run going higher. What we want to do is on the pullback, right? On the pullback, we're very bullish right now, right? We're very bullish right now. So if I want to sell on that pullback, right, I'm going against the momentum of the market. This thing could easily keep going higher, okay? We all know that, right? We all know this could easily keep going higher because that range we have above us on the 60-minute. So I can't get too aggressive at selling on the way lower. This is where we look for what we call a crown reversal. We're going to sell the crown reversal on the pullback. Now, whenever we're going against all this momentum, I like to use half-size positions on any time I go against the direction of that momentum. What I want to do in this situation is I want to trap in the buyers, right? We all understand if you're buying up here, you're buying relatively high, right? You're buying right into all of this resistance we just talked about on the 60-minute chart, right? It's the underbelly of that range. So if I can get buyers trying a couple times, I'd love to use this crown reversal. Now, not to worry, I have a lot of examples of this inside of our free trading classes. It's a lower low in price, right, and a trap high. Remember, you want that strong signal candle closing below the moving average. We saw one today. Pop it up, buyers once, buyers twice, that trap back down, right? That is what we call a crown reversal. Now, as we go lower, now let's get these bears roped in, and let's use a failure pattern. Now, we'll call this a two-try failure. At this point now, we're down around that breakout pullback area. We might even be down around that 60-minute trap area. This is where we want to trap the bears in, right? Now we can come in and buy nice and low. And you want to think about a failure pattern, right? Let the bears try once. Let the bears try twice. Let them try twice because I want to use their stops to fuel this move going higher, right? We call these failure patterns in our trade room, failure patterns in our free trading classes, right? So we'll use a failure pattern to trap in. And keep in mind, right? This entry pattern could be lower, right? I almost hope it's lower, right? Because again, we know we're trying to buy as low as we can right now to absorb the sellers who we assume are waiting around these highs right now. So we trap the bears in, we get our failure pattern below that moving average. Now, the most important thing as we go higher, remember, as we go higher, who's waiting up here? Sellers, right? More bears are. The best entry pattern to buy on the way higher is going to be a trap. All right. In this case, it's a bear trap. Okay. The same way we look for a lower low in price and a trap high here, it's a higher high in price and a trap low right there. All right. These three setups. Now remember, I can't predict everything for tomorrow. It could be a bit lower, right? So just be aware of that. But as we're going lower, we're trapping in buyers. Remember, we're going against momentum. We need their stops to fuel this thing going lower. I love that crown reversal. We saw a couple of them today in the morning trade room. So crown reversal on the short, remember, it's a half size position, right? Because there's no telling it could keep going higher. Right, we could keep squeezing higher here. Half size position, roping those bears, get underneath the moving average, right? Get underneath the moving average once, twice, run those stops with that failure pattern, and then as we go higher, right? Don't chase it. The one thing about tomorrow is buy as low as we can, and that final entry is a bear trap. Remember, it's that higher high in price and that trap below that low. Now, if you're watching for the first time right now, this may be completely new to you. None of this might make any sense. Crown reversals, failures, traps, what the hell are these things? Not to worry. I teach all of this, and I have hundreds of examples of these on real charts in our free trading classes. I'll put a link up top there for you. I want you to learn this stuff. I'll put a link up there for you, upper right-hand corner. Grab that link. Take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use every morning in our morning trade room to know exactly where the best winning trades are going to be that day. But most importantly, I'll teach you 4 of my favorite entry patterns to help kickstart you making money each day. If you're not making consistent money right now, these markets are way too good not to be making the money that you want. So grab that link, take that free course. It is perfect for someone trying to make the jump into full-time trading. And again, hundreds of examples of all these patterns, the crown reversals, right off the high, the deep pullback, trap those bears in with that failure, right? And then run those stops. And as it's running higher, don't chase, right? Look for that bear trap entry on the way higher, back up to retest these highs and leave that runner because of that range up overhead. Also keep in mind too, right? If you can't grab that link up there, I'll put all the important links tonight here, guys, along with my Twitter feed and things like that. I'll put all that in the description of the YouTube video. Now, there's one more kind of variation of this. Let's talk about the double bottom reversal, because let's not sugarcoat this. We are. I would be surprised with an overall bear market. I'd be surprised if we didn't see a real strong shot lower. Right, I would be a little bit surprised. Right, the bears. I doubt they're going to go that easily. Maybe they will. Who knows, right? But we better be ready for that. So if we get, let's say we are lucky enough to get that crown reversal, right? And the market really dumps, right? It really dumps, right? Down to some of these big core levels. Again, buyers below these levels, anticipate buyers below those levels, right? We then get the bears trapped in, right? 1, 2, we pop it up, but we don't go all the way back to that high, right? Oftentimes what happens is we'll get that failure. We'll get a first target on it. We'll move the stop up to point of entry, but a lot of times it'll hold like one of these levels and roll back over on me, right? What do we do in that situation? This is where a double bottom reversal comes in handy. And it's just like it sounds, right? It's a double bottom. So imagine now we get that strong run down, right? We get that bounce up. And again, they may hold some resistance here as we go lower or as we go higher, and they may go back and run down to retest a low. Now, we talked about this a lot last night on the video. These are areas where everyone is a buyer, right? Everyone is a buyer in these areas. The reason I say that is because if you're selling, right, if you're going to short that bounce right there, where are you taking profit? You're taking profit at that low, right? You're buying, right? You're buying your way out. So the sellers who got short, they're buyers, right? Buyers are going to buy down here because that's what buyers do. They buy low. They buy below prior swings. And then what we want to do is as we run back and start pulling back now these are rookies, right? Professionals are not going to sell low, right? Professionals don't sell low. They don't chase the market lower. Professionals are selling high, right? I know this because I was the rookie chasing after it. I was the rookie who didn't have the guts to sell the bounce, right? You make your money by selling when the market goes up, right? Not when it goes down. So rookies come in, and now those rookies with small accounts and tight stops, they will oftentimes get squeezed easily on these, and these create that. Again, I would use a 2-try failure, and again, you'll see examples of that in the free trading course, right? That 2-try failure. And then once those bears fail, then we start making our run higher, go right back to looking for those traps again, right? Right back to looking for those traps. Good example right here, right? Good example right here. We run lower, bears once, bears twice, right? Stops get squeezed as it runs higher. Is that trap right there? Right? This pattern, this sequence happens over and over and over again. So again, if we roll lower and we end up double bottoming off that low, right? Nothing changes. Rope those rookies in. Remember, we're not trying to predict the bottom, right? We're not just buying blindly at these levels. That's a rookie mistake. Let the sellers dig their own grave. Use their stops to fuel that profit for you, right? Use the stops to squeeze this thing running higher. And then as it's running higher, just don't chase it. Just don't chase it. Remember, you want to buy as low as you can as it runs higher. Okay, we call that double bottom reversal. Okay, we see a lot of times here, we'll get that 2-try failure. It'll pop up. We may not get that big run back up. It revisits that low. We trap in again, and we simply ride it back up again. All right, guys. So that's kind of the sequence I'm looking for as we go. And again, it could be here, it could be here, it could be all the way down here. That's the one thing I don't exactly know here for tomorrow. So that covers the S&P. Let's now go to the NASDAQ, because the NASDAQ has a slightly different look to our charts tonight. It's very similar. I also want to go over a range-bound scenario for you tomorrow. Let's talk about the NASDAQ now. The NASDAQ obviously squeezed a bit higher right now. It's a range market. If you've been watching these videos this week, you kind of know what we've been talking about, right? Had that strong run down, popped up. I've been talking about all week how the sellers really had a difficult time selling. They got a gift from that JOLTS report, right? The JOLTS report on Tuesday was just a wrapped up, nice and tidy bow on the top gift for all the bears there. And sure enough, right, bears got roped in, selling low. We knew better than that, right? You knew better than that, and they got squeezed, running back higher, right? So now we find ourselves in a tough situation, right? We're overall bearish. We expect these sellers to try to hold this area, right? Try to retest that low. Not an easy job, by the way, right? Not an easy job. That is a lot of momentum going higher, and the buyers have one thing on their mind right now. The buyers want to go out, take out that high. The buyers want to go out, and I'll tell you, this, we have non-farm payrolls on Friday, so the idea of getting a full pendulum swing seems a little bit far-fetched before we hear from jobs report on Friday. But this is why I said earlier, the next 24 hours could really determine the trajectory of easily the rest of the month and possibly the rest of the year. So this is a very, very critical area. Now, again, the most important thing that should be on your mind right now is buy as low as you possibly can. All right, buy as low as you can. Remember, when markets squeeze off this is such an important part of this. When markets squeeze like this is, I'm sure it's a lot of buyers, but it's mostly sellers. right? It's mostly sellers who saw that big run down and they tried getting short and they got squeezed. The fuel that moves this market higher is all bears. It's all bears getting stopped out. So if you're a buyer right now, coming in right now, are you going to want to buy high? Don't say yes. Okay, do not say yes. If you say yes, you get some work to do. The buyers are not going to want to buy high right now. Where do they want to buy? They want to buy low, right? And we learn this in our free trading classes, right? What's the best place to buy low? It's below prior swings, right? So as we make our run higher, you know there are buyers waiting right there. There are buyers waiting right below these lows here because this is how you turn the corner now and absorb those sellers. All right, guys? So most important factor here on the NASDAQ. What a great chart, especially if you guys are learning this for the first time right now. Stuff like this is tough to learn. So you guys are getting a good example of it here right now. Over to tick charts now. Okay, this is a 4,000 tick chart on the NASDAQ. There are three basic criteria here on the NASDAQ. You'll notice it's quite a bit more bullish than the S&P was. The first one is this trading range. You'll notice now we kind of pop up range and we rotate off the low. We just talked about a range rotation there on the 60-minute chart, right? So we're now up at pretty significant area of resistance right now. Very difficult to justify being a buyer. Could this keep going higher? Absolutely it could. And if it does, we go back and execute the same game plan we talked about on the S&P, right? The crown reversal, right? The move down, trap the bears in, all right? So if it keeps on squeezing higher, the game plan stays the exact same. Right now, though, based on what we're seeing right now, we're at pretty good resistance. We had a range earlier in the day. Breakout leg is the measuring leg, up at a measured move area, and we're up at pendulum swing resistance. Very good example of area we do not want to be a buyer right now. Next one is a spike in channel. We pop up, market spikes and begins to channel. If you're taking if you're a student of mine, in my intermediate classes, we talk a lot about spike and channels, how spike and channels love to get below prior swings. It's like one of the most common trait of a spike and channel is they love to get below prior swings, right? Again, because everybody wants to buy as low as possible. And then again, the same thing off the S&P, 60-minute trap levels, right? Underneath any of these swings, we expect buyers to be waiting. So knowing that, it's a lot of the same idea here, right? As we pull back, it's a crown reversal on the pullback. That deep pullback now, get underneath some of these prior swings, trap those bears in, let them try a couple times, use their stops as fuel, and again, that bear trap on the way higher. Almost the identical, pretty much the identical game plan as we should go back up and retest, right? And retest that level. If we were to get a very strong crown reversal and a rip going lower, again, oftentimes we'll get that to try. It'll bounce, it'll retest that low. Double bottom now comes in, trap those rookies in, 1, 2, and back up, right? And back up, we go from there. That would almost be one of the best scenarios because you can double dip, right? You can make your money in the first one, make your money in the second one, and hold that runner back up to retest the high. One variation I want to talk about, which also applies to the S&P as well, is if we go sideways into another range. I mentioned earlier that we have kind of a lull in the news tomorrow, kind of the calm before the storm on Friday. It would make a lot of sense at some point tomorrow for us to see a trading range, right? Markets oftentimes will kind of get into the fetal position, if you will, before a big news event. If we see a range up here, okay, if we see a range up here, it's a very simple game plan. What you want to do is you want to find support levels underneath the range, wait for a breakout, look to trap in sellers below the moving average. And what do we always talk about on these videos? Whenever you have a range, it's failures at the edges. And what is again? Traps as it rotates, right? Failures at the edges, traps as it rotates. We know that ranges love to rotate, right? We go up into a trading range, we rotate down, rotate up. They love to rotate back and forth. So if we see a range up here, we'll go out looking for levels of support, right? Below the range. Could be a trend line. It could be a swing level. We'll find support below the range, find support, wait for the pullback. Do not trust that breakout. Do not trust that breakout. Ranges act like magnets. Trap in the sellers with a failure pattern, failures at the edges of the range, and then as it goes higher, think about that trap entry, traps as it rotates. Failures at the edges, right? Failures at the edges. I'm talking about a failure pattern like we learn in our free trading classes. Failures at the edges and then traps as it rotates. Remember, it's a higher high in price, right? And that trap below that low. And then one thing about a bullish trading range is to mark up the amount we go below the range, project that amount above the range. These are called pendulum swings. I call them pendulum swings. And that creates a fantastic final target. I take half off, right? Half off at the high of that range, a quarter off at the pendulum swing, and a final quarter of that position I'll leave for a runner. This could also apply, of course, to the S&P as well. So keep that in mind, right? Wouldn't surprise us at all. So very similar game plan on the NASDAQ. And again, if we do keep on going higher, it's the same thing, right? It's again, looking for that breakout, pull back and go. We want to see that bull trap, that crown reversal, that deep pullback, trap those bears in, and then right back up to retest. The variable right now is how deep does that move go, right? Which of those levels do we take out? Do we take out any of them? And again, do not be surprised if we continue to grind higher here, right, as it rotates up off the low of that trading range. Man, I'm getting excited just talking about this right now. This is one of the best parts about these videos is we go over the game plan. Nobody knows what's going to happen tomorrow, right? We don't make predictions. We put the game plan together. That way, no matter what we get tomorrow, we have a game plan we can execute with confidence and discipline tomorrow. So let's have a great day tomorrow. Now, speaking of tomorrow, 8 o'clock Eastern time, the best place to come out and learn this stuff and trade along with me is in our trade room, 8 o'clock Eastern time with all the advanced members. I'll put all the important links down the description of the video. I would definitely recommend, if you're watching for the first time right now, start with the free classes first. Get a good foundation, learn the fundamentals of the strategy. That'll get you moving in the right direction, and soon enough, you'll be ready to go and trade with us sometime soon in the morning trade room. If you have any questions or any trouble getting access to our free classes, you can always call the office. Megan and I are always here to answer calls. We always have live chat on for you guys as well. So if you got questions, if you need help, if you're wondering about the best brokers or charts or whatever, don't be a stranger. We're always here. You're never bothering us. So keep in touch. In the meantime, though, have a great rest of your evening. Hope you learned a bunch here tonight right now, and hopefully you'll use this knowledge to make a bunch tomorrow as well. In the meantime, have a great rest of your evening. My name is Joseph. Thanks for tuning in. Thanks for watching all the way to the end. And get out of here. Enjoy your evening. Be well. Be nice to each other out there, and be here tomorrow. Adios, amigos. Bye-bye for now.